Good afternoon. It's noon. It's Thursday, and this is Coffee with Ralph. And I'm Ralph Gale. I'm your host of this edition of Coffee with Ralph, and every edition as far as that goes. I am the founder of Fireproof Financial Group. And over 30 years, I've been in this business, doing this business. And each time I come across this question, I think to myself, I guess it's important to understand, but it's really not that hard. And the question is this: how does an insurance company make money? My gosh. After all, they take these life insurance policies and they pay out these big benefits on little premiums. Well, that question came up again this week as I sat with a new client, and we were discussing annuities. And he goes, well, it's an investment. I said, well, let's be clear about this. Anything that an insurance company has other than a variable annuity and variable life insurance is not an investment because your money is not at risk. You see, just the term investment means that you've got some risk involved, doesn't it? But I need to start out with some explanations so we can have this conversation a little bit more specific. You see, I see these commercials on TV. One is with for the graded benefit life insurance. No health questions asked. All I got to do is fill out this form, send it back, and for $9.95 or $9.99 a month per unit. There's the big one, per unit. I can get my insurance, which will be effective 100% death. The benefit will be intact in year number 3. For the first 2 years, you will simply, if you pass on the first couple of years, you're simply going to get your premiums back and a little bit of interest, which leads to the next question, which is, why don't I just buy term insurance? And there's now an ad, well, it's been around forever, term insurance with return of premium rider on it. So if I don't die before the term is up, I get my premium back, plus maybe 1 or 2% interest a year. That doesn't sound like an investment at all, because 1 or 2%, I can get better than that on a CD or in a savings account. But then, what about just term insurance? Doesn't that sound like a good idea? And why buy permanent insurance when I have to pay more for it than I do my term insurance? We're going to talk about all that, and we're going to wrap it all up with some figures, probably from 2021, because that's the last time I saw a study on it, and I just pulled it up, so it's kind of fun. You see, in 2021, here's a figure for you. This is just for that year. I can't pull up figures for a total amount of life insurance in force, even though I hear it's somewhere in the $900 trillion range of life insurance that is in force in the United States. But let's just talk about premiums for a minute, and then we're going to get into some industry statistics, okay? In 2021, $204.7 billion. That's a big old number now, isn't it? $204.7 billion was the premium paid for life insurance. Okay. Now, back that up a little bit. 40% of that is for term insurance. Now, let's be specific about what term insurance is. The term says it all for us right there. I can buy it for 10 years. I can buy it for 20 years. I can buy it for 30 years, depending on my age. And when that term is done, that insurance ends. It stops. Unless I have return of premium benefit on it, which means I get all that premium I've paid for the last 10, 20, 30 years. I get it all back with a little bit of interest. So let's talk about that benefit payout. Now, If it's a permanent insurance and it stays in force, now understand that if you don't keep your policy in force, the insurance company keeps the money because they did insure you during that period of time before you let it lapse. But if it's in force, 1% of all term insurance is ever collected on. Meaning you've lost your bet. With term insurance, it's a bet. Am I going to die before this term is up? That's the deal. Now, there's some advisors out there that all they're allowed to sell is term insurance. And yeah, you know what? They're making a good deal for it because they get return of premium added to that for additional premium, which, by the way, they don't get that back, but they get the original premium plus like 1 or 2%. But if you look at that 204.7 billion, and you think 40% of it is term insurance, that's $81.8 billion of term insurance, which only 1% of that will ever be collected. So what's that? I mean, we're getting down in the minutia here, but it's not. That's $818 million out of $81 billion that'll be paid out. But the premiums on that, well, what happens to that? You paid the premium, that money belongs to the insurance company. So you're asking me, people don't understand how insurance companies make money, but yet they're the richest companies in the world. Well, if I collect $81 billion and I only ever expect to pay benefits out on $818 million of it, well, that leaves me $81 billion profit. I'd say they're making money. I don't know about you, but I'd say they're making money. Now, transfer that over, 100% of all permanent policies that are in force, that are kept in force, get paid. 100% versus 1. So why is term insurance ever offered? Do I sell term insurance? Yeah, I'll do that periodically. But it's generally because I have a young couple trying to put their feet down, and they have some kids and they have debt. And, after all, if you're in your 30s, you got at least 30 some years worth of earning potential out there. And if something happens in that term before they retire, there's a real loss to the family here. And that's not just in dad, even though that's huge, or mom, and that's a huge loss, but it's also the income that would have been generated by them. There's a little known stipulation in all term policies: guaranteed convertibility. It means if something happens, and this is one of the reasons I put large policies on young people. If something happens and their health gets bad real fast, or they get diagnosed with something that's going to keep them from getting insurance later down in their life, like cancer, like becoming paralyzed from an accident, like a lot of these things. Well, all of a sudden I have the ability to keep that insurance on them without any health questions. Is that important? Well, yeah, it's absolutely important. I just worked up with a client the other day, and I could convert what they had for pennies on the dollar compared to what it would take me to get a new policy issued. I mean, pennies. A tenth, probably, maybe 20% at most of what it would cost to have a brand new policy issued. So was it important? Absolutely, it was important. They're at a point in their life where they have substantial assets now, which means some taxation issues when they pass on. But back to my original question here, and I'm not sure how we're doing on time. Why buy life insurance? Life insurance is not an investment, but it is. It's an investment in the security of your family. It's an investment on your family's lifestyle. It's an investment to make sure that you're okay in your latter years as well, with some of the new policy riders and things that are available now that weren't available even just 10 years ago. Long-term care benefits in there. You've heard me over the last few weeks harping on that. Life insurance has a benefit for that. But how do they make money? Well, folks, if the life insurance company couldn't figure out how to make money, they wouldn't be in business. And of all the recessions and depressions that have hit the United States, a life insurance company like MetLife or any of them, they've survived it because they have money. They have huge cash reserves because they get these premiums in, and they know that they have to pay some of the benefits, but only 1% of term. So they know that's a pretty good cash flow right there. So if you're a company and you have one product that's going to be 100% claimed upon, and one product that only 1% is going to get claimed on, what do you think you're going to push? Of course, you're going to push the term. Of course. Why? Hey, it's free money. As long as you don't kick the bucket in the meantime, which, like I said, only 1% of term policies ever get collected on. That says a whole lot right there, doesn't it? I think I'd push the term policy too. But if that's what your advisor's telling you to do, call me. Coffeewithralph.com is a free 15-minute call, and I would love to have this conversation with you more in depth. Again, this has been Coffee with Ralph. It is Thursday. Hopefully we kept this within our 15-minute time span. I believe we did. If not, I apologize. And I want you all to have a great week. I'll see you here at Coffee with Ralph at noon next Thursday.